Hi everyone. Today I'll be telling you about what an annual report is. And what it really is what a company has done over the course of 1 year, summarized in one single document, which is very important to us as shareholders. Now here's the Google description if you want to see that, but I will go into a little bit more detail. First and foremost though, please like and subscribe to our channel and like the video if you enjoyed it, or give us a dislike if you didn't, so we can learn from our mistakes. If you do have any questions, please pop them in the comment box so we know what you guys want to learn about more in the future and how we can accommodate those wishes. So let's dig right in. An annual report is a document, as I said earlier, that a company releases once per year. Over the course of a year, a company goes through a whole bunch of business, they sell a lot of products, and they also have to pay a lot of expenses. So they summarize all of this and put it into a document. Again, this tells us as investors how the company is doing. If we look at their numbers and we look at simply the financial performance, we can see whether or not the company is actually set up for future success, or if their business model is actually failing and if it's not doing as well. Luckily, the companies always compare it to the previous years, so we have a direct comparison. For example, right now, we have a lot of companies that aren't doing that great because they've been heavily affected by the coronavirus. Now, looking at the annual report is a very, very valuable thing that you can do, especially for us as lead pass investors. Because as lead pass investors, one of the main pillars for me to make the decision that a company might be a good investment is that they have a very, very solid financial background. So I always, before I make an investment, go and look into the financial performance of a year. Let's look at an example. Recently, you've been hearing a lot about CLOV in this past week, or Clover Health. They've been going through the roof with AMC and GameStop. They are a very, very trendy stock right now. But the question is, are they actually a good investment? If you've been doing your own research, you probably know that they are a meme stock and they're being hyped by the Reddit crowd. So they're probably not going to be great, but I simply want to give you guys an example of how I do my analysis. So the first thing that you do is you go on the website of the company that you're researching. In this specific scenario, you go on Clover Health and you look at their About Us section, and then you're looking at the investors. I've marked that down for you on the picture that you can see right here. Now, unfortunately, sometimes it's not that easy to find. So if you're not finding it within 5 seconds, really just type into Google the company that you're looking for and investor relations, because that's always the same thing. Once you are on the investor relations page, you're looking for the SEC filings, or a section called annual reports. And once you get there, you can filter it down to look for the 10K, or the annual report, which I have also marked down for you here. Now, this is a PDF that looks super, super boring. And funnily enough, Warren Buffett reads these before he goes to bed at night, which I cannot imagine doing myself, but it actually tells us a whole bunch about the companies that we want to invest in. Now, the first thing that you want to look at is the table of contents, because the table of contents gives us a whole bunch of information of what we have to look for, and we don't have to scroll through the entire document until we come across the information that we're looking for. In this particular instance, when I do my research, there's 3 main areas that I focus on. Number 1 is the financial statements and supplementary data. That is where I can really see in detail what the performance of this company was like over the course of a year. They do have consolidated financial statements where a company can choose what they think is the most important thing to show us, but as an investor, I want to see the full story, so I don't want anybody to filter information for me. I want to make that decision on my own. So when I go to the financial statements and supplementary data, I'm looking for 2 things. the balance sheet and the income statement. The balance sheet is divided into three main areas where you have assets, liabilities, and equity. We do have short videos explaining these specific areas, what they are and what they subtract, how they're calculated, why they're important to us. But first and foremost, when I'm looking at the balance sheet, I'm looking to see if a company really has a solid foundation. Do they have a lot of buildings? Do they have a lot of cash in their bank account? Do they have a lot of vehicles that they could use to build their business? And when we're looking at CLOV, well, they don't really have anything. They simply have a whole bunch of cash, and then they have promises to be paid back. So this isn't great. Now, the next thing down there is liabilities. So how much debt do they owe? And finally, you have the equity. And the equity is actually in deficit. If the equity is high, it shows us that the company has potential for future growth and is a key metric for us as lead pass investors. And what we see here with CLOV is that this really, with a deficit, isn't available. So this is already looking really, really bad. The next thing that I look at is the income statement. The income statement usually has the entire rundown of the money that comes in throughout the course of a year. So if you would be looking at McDonald's, you'd have all the money that they made by selling hamburgers. And then they had to pay for all the people that made the hamburgers, and they have to pay all the people that did the accounting, and they also have to order the buns and the salad and the patties and the whole shop. But if we look at CLOV, we don't even have an income coming in. It's simply expenditures, which is very, very weird. And this explains why a company like CLOV isn't a great investment and can simply be hyped up because it's on the stock market. However, this isn't great. One of the most important things that I look at is the revenue, which again, as I said, is none. They're not increasing their sales. They're not selling anything. And the next thing, because they're not selling anything, no money is coming in, they can't make a net profit. Once they've subtracted all their expenditures, we cannot see that they've made money over the course of a year. If there would be net profit, this is something that I'm looking at to see how has it developed, what has the company done, how is it compared to the years before? Because obviously we want companies to grow and grow and grow, because that, for us as investors, will grow our investments eventually. Now, CLOV is a very, very bad example. They don't have any income, so they're just making a loss. This already speaks volumes to me as an investor, and I can already say that CLOV is not a lead pass investment that I would consider. However, I'm not a financial advisor. You have to understand what you do with your money and how you invest in the stock market. So please, please, please do your research and consider valuable factors like this before you put your money into the stock market, because it is a very, very risky place. Next, after I've looked at the finances, I would want to see what the CEO has to say about the financial performance. And this is usually in the very, very beginning of the annual report. So I scroll to the very top and I simply start reading through the comments of the first few pages, because this is where either the CEO or the chairman or a person in charge simply takes responsibility for what has happened and the financial performance. Now at CLOV, all we can see is a description of the company, what they're trying to tell us, what they're trying to convey, what the company is trying to do, what their values are, and how they're going to make a difference in the world, which is all fine and good, but they're not giving me a statement of why this is a great company and why the company has performed the way that it has. So again, this is a very, very large red flag. Arguably, CLOV isn't a great example. So if you want to have a different example, go and look at any annual report from a company that you might want to invest in, for example, Google or Facebook. And this is a place where we can actually find statements of the management team to the financial performance. If I go look at a company that's performing well or a company that isn't performing well, I want to see what the management team has to say about their performance. Are they lying to me? Are they addressing the things that are very important or that haven't gone well in the first few paragraphs? Because that's what I'm worried about. As a shareholder, I want to have transparency from the management to me, telling me what's wrong, what they're worried about, and how they're going to tackle it. However, with CLOV, we don't have this. So maybe go look at other reports to find out what you think a good manager should say. There is extensive examples on good and bad management and how they talk about their performance in a financial year. Now, last but not least, regardless of what this CEO or management person has said about the company, I want to know how much they're paid. So I go to the executive compensation, where I go and look at how much does the CEO and the management in general get paid. Why is this important? Because first of all, if they get paid a ton of money, they might not really care about how the company does. If they get hundreds of millions of dollars, then they could care less about the performance of the company. I also want to see the CEO and management team has shares in the company, because that means that they're trying to drive the share price up, which is directly relatable to me as an investor, because I want to see the share price going up just as much as the management does. And if the management is just as involved in the share price as I am, that's a good thing, because I can trust them to try and push that price up. And this is a small indicator. Obviously, there's huge companies around the world that have a lot of money and pay their executives a lot. And this is normal. We have to get used to these numbers. However, we want to see it in a relatable scale. A CEO that doesn't get paid as much, it's probably a good guy. He's trying to help out the company. But you also have to be careful of specific scenarios where the management are doing shady things to pay themselves even more. There are a lot of examples of this as well. And if you want me to make a video on that, please let me know in the comments. Now, overall, looking at CLOV, we can see that the management we don't have their salaries available on the annual report because, well, they're not making any money, so they're not paying any salaries. This is CLOV is a SPAC, so a special acquisition company, which is only founded for a purpose, a specific purpose of a other company. Now, I'm not going to go into what a SPAC is and how that helps, but this is just an example to show you why we have to consider what is in an annual report. Last but not least, I put all the points together. I start thinking about my investigation that I've just made about the company and make my decision on whether or not it could be a good investment. If I see green lights, if I see good numbers and a management team that's telling me about what is going well, what is not going well, and I also see that this management team is not overpaying them and keeping in line with what I think as a shareholder is important, that is very good for me. And that's when I can start thinking about whether or not to invest in this company. However, with CLOV, I don't see any of those green lights. I just see red flags and red lights. So I'm not going to be investing in CLOV. But again, I'm not a financial advisor. If you think differently and you think that the Reddit crowd is giving us great advice to pump up the price of a stock so they can make money, and you think that it might be a good investment, well, go ahead. But again, make sure that anything that you do in the financial markets, you think about really, really closely, and that you take care of the money that you put into the market and do your research first. Well, thank you very much for listening to this video about annual reports. I really hope that you enjoyed it, and I want to hear your feedback. Give me a comment in the comment box. And if you like the video, give us a thumbs up. And of course, to help us with the algorithm, subscribe to our channel. Thank you very much.